Hello, this is Dr. Melissa Cohen, and I'm here today to do a week 5 checkup on the Robinhood account. The good news is I haven't looked at it all week, and as you can see, it's $109.01. Last week, I think it went down to like 102, so that's a big jump. And overall, we're in week 5, and as you know, we started with $100, so we're up to 109, which means we've got a 9% return, or we're up 9% at this point. The bad thing though is when you look at the graph, or this is for the day view. Let's go ahead and do a 3-month view. And if you look at it from the 3-month view, it turns to green. Obviously when we start 100 and it's up to 109. Overall it is an increase, but it was red for the day. As you can see, we had one day and it actually has gone down. So if I'd done this yesterday, we would have been a little bit higher, it looks like. We're going to look at the 3-month. And you can also notice it changes the stocks over on the right hand side here. So Tesla is down in the past 3 months. Fitbit, or since I started the account, Fitbit is up. Facebook red is down, down, down. And let's see, I'm going to change this to my equity, because that shows how much the value of each stock is. And as you recall, I did $25 on the 4 stocks, and then I was gifted the bottom share. So we had $25, so Tesla's up over $4. Fitbit is up just a hair. Facebook is down a hair overall, and Starbucks is up $1.90 from that initial investment. So if we were to stop today, it would be great. And I say that because the baseline when you're looking at investments is what has the U.S. stock market done since its inception to today. And I can't remember the exact date, but we're talking 7, 8, 9 decades worth of stock market prices. And when you look at the average returns for that entire time period, it's around 8%. And just to give you a point of reference, that includes the Great Depression, that includes September 11th, 2001, that includes all of these black market crash that they had, the financial crisis of 2008, any big event, whether it's U.S. based or global based, that affected the stock market, all of those ups and downs are figured into this 8% return on the market. And so when you are an investor and you're looking, well, what do I need to do long term? That's what you need to consider, is where can I spend my money to get about an 8% or greater or less return if I want to invest it for 30, 40 years. Obviously, if you're nearing retirement, or you're already retirement, you don't want to put your money in the stock market that you are going to need within the next 5 years, because it goes up and down. And you want to look at the long haul to get your 8% annual return. You don't want to take your money, have to take your money out when the market dips down and such. So just always keep that in mind. Those are a general rule of thumb, is the 8% is kind of your investment value, and that's what corporations kind of look at as well, in terms of risk and return, and what do you need for the long term as well. So thanks for joining us. Join us next week, and hopefully, oh, wait a minute, before I go, I do have to look. It does look like the price has actually gone down to 108.96. So as you can see, it fluctuates. So before I go, thank you for joining me, and I'll see you next week for a quick update as well. Thank you.